Okay, hello again. I just want to do a quick video about the 2013 question and the May entry. Now, there are two parts to the May entry for a start. There's received a bank statement showing direct debit of 8,400 to cover advertising for the year. And the other second part is the credit transfer received of 9,900 to cover 11 months rent receivable for the year. Now, the rent receivable part is similar to questions that we've done already, so I'm not going to do that today. So I'm going to pretend or treat it as though there were just the one part and see how you would deal with the direct debit of 8,400 to cover advertising for the year ended, because that is very different to anything we've done so far. Okay, so in order to do that, I've just prepared a little mini thing here where I have the some of the assets and liabilities that we'll need for this particular portion and the amounts that they were entered in at the very start of the year. Then I'm going to just do the May column, and then I'm going to do the 2nd December column, and I'll need the total column over here as well in order to complete it. Okay, so first start, let's go back to it. So if we pretend the first part doesn't exist, or the second part doesn't exist rather, and just do the first part, it says it showed a direct debit of 8,400 to cover advertising for the year ended 31st of the 8th, 2012. Now, what we're used to seeing so far is that there would be a direct debit or a payment for some kind of an expense, and what we'll have is that we'll have prepaid that expense into next year. But this is for the this tabular statement is for the year 2012, and yet this doesn't say anything about the year ended something 2013. So this isn't one of those where we're prepaying some expense at the while we're making this payment. So there won't be any advertising prepaid at the end of the year. So that means we're not going to be making some kind of an entry into an asset called advertising prepaid up here. Okay. Now the next thing to note about it is, if we're paying some money to cover advertising for a year, which is ending on the 31st of August this year, then it means that that advertising campaign must have started a year ago, which is back in September, we'll say, of 2011, the previous year. So it started in 2011, but we didn't pay for any of that year's advertising until May. Until right now, we paid for the whole year of advertising that we got on May the 31st of 2012. That's when we paid for it. Okay, so that means if the advertising campaign started back in 2011, that up until the start of this year, in January 2012, we had been getting advertising, but we hadn't yet paid for it because we don't pay for it until May 31st, 2012. Which means that at the very start of this year, we'd gotten the service, but we hadn't paid the bill, so we had some advertising due, or an expense due at the start of the year. And that's why we're going to be, when we're doing this, we're going to be putting an entry into the expenses due section instead of the advertising prepaid that we've been used to seeing in previous ones. Okay, so the next thing is, how do we actually deal with it? Well, it's the same way that we'd normally deal with it once we know where we're putting our figures. We first of all look at the fact that it's a direct debit or a payment out of 8,400 from our bank account. So our bank has to go down by 8,400. Now, if the bank had been down here, of course, it would be different, because this would be a plus, and then down here, a payment out would mean a plus. It would mean an increase in our bank overdraft. But if the bank is up here, it means it's going down by 8,400. Okay, that's the first thing. Then the second thing is that we're always putting the same amount, the 8,400, into the relevant place here, and all we have to do is decide, should it be a plus 8,400 or a minus 8,400? And I think it's quite easy to see when you don't have the second entry in here. Well, in order for this to balance, it's got to be a minus also, doesn't it? So that you'll have a minus 8,400 here, in your total, and a minus 8,400 here. Now, of course, that's not going to be your total in reality, this 8,400, because we do have a second entry that goes into the bank, and we have something else that goes into, I think it's rent receivable prepaid down here. So it's going to be a very different totals, but this is how we would do it if there were only one. Okay, so the next thing we want to know or to do then is to sort this out in the 2nd December column, and we've already seen that that involves doing something with the totals. Now, the issue here is that it's different to the way we calculated the last the other entries. This is cover advertising for the year ended 31st of the 8th, 2012. So if we're talking about that, we're talking about from the start of 2012 to the 31st of the 8th, 2012. That's a period of 8 months, isn't it? So we're talking about this direct debit is to pay advertising for 8 months of 2012. And obviously then it's going to be, since it's a year's worth of advertising, it's going to be 4 months of 2011. So if there are 4 months of 2011 included in this advertising campaign, that means by the time we got to January 1st, 2012, we had already received 4 months worth of advertising without paying for any of it, which means there was 4 months of advertising due at the start of the year. Okay? And if we'd been, compiling our accounts correctly, then that 4 months advertising due should be included in this expenses due figure. It may be all of it, it may be part of it, because when it says expenses due, it could be a bit of advertising due, a bit of repairs due. They just put them all in together and came up with this figure. But we know that there's 4 months of advertising due included in this figure. So our first thing to work out is what is 4 months worth of advertising come to. So direct debit of 8,400 for a year. So if I just maybe do that over here, 8,400 is for a year. So if I divide that by 12 sevens are 84, isn't it? That means it's 700 per month is how much we pay in advertising. And if there were 4 months due at the start of the year, if I multiply that by 4, that's 2,800 is the amount of advertising that we had already received but had not paid for at the start of the year. So here's what we do. It's quite simple. If we say that there was like repairs due and all sorts of other things due at the start of the year that all added up to 4,200, and included in that 4,200 is this 2,800 for advertising due. When we went and paid our bill for advertising here in May during this year, well then that is no longer due. So at the end of the year, we just assume, because we haven't been told any differently, that all of the rest of the things that we hadn't paid yet are still due. We've yet to pay them. So at the end of the year, our 4,200 should have gone down by 2,800 because we did pay that bill. So if I just say 4,200 minus this 2,800, that's the advertising that was due at the start of the year that we've now paid, gives me 1,400. That amount of expenses is still due at the end of the year, so we put it into the total column. So we know that this 4,200 should be by the end of the year gone down to 1,400. Now here's the thing though, we need to come up with some figure for the 2nd December column to make this row total to 1,400. And so we look at what we have. We have already 4,200 a plus, 8,400 a minus. If we add the two of those together, we get a minus 4,200. So if I want to get that to be a plus 1,400, well, how do I get a minus 4,200? Whoops. To become a plus 1,400, well, I'd have to add 4,200 for a start. Whoops. Add 4,200 for a start just to get you back to 0. They'd cancel each other out. And then I'd have to add a further 1,400 onto it to get up as far as 1,400. So altogether, I would have to add 5,600 to this minus 4,200 to end up with a plus 1,400. So 5,600 is what I'm going to put into this column here in the expenses due section of it. Now, in order to balance it, we would put something in the profit and loss, as we've seen already. And in this case, since they're both in the same side, they're both on the bottom, then in order to balance it, I have a 0 up here. I need to have a minus 5,600 in the profit and loss to get a 0 down here. Now, obviously, in the real question, it may not be a 0 balance because you have other items, although it will, because your other item is going to be rent receivable. It's also down here, so you are going to have a 0 balance in both places in the real question. So that's it.